Good day, guys. Welcome to episode 41. Welcome to Forex Walker. Here on this the Eurozar, we were talking about the Eurozar and what we're expecting uh, the ZAR and the US dollar to do on this episode. Let's look a little bit into market fundamentals. I know that most of us we don't like market fundamentals, so this is the US dollar does not have that thing called permanent employment uh, thing. It just has employed persons. So instead of that, we're going to be using youth unemployment. So here you can see that on the previous quarter, this thing is released month over month. So you can see that we had a spike in the unemployment. And normally, how I trade these things is that I wait for, even if I have this one, I'm going to be trading this one. So I'm lagging by a month on those things. So this is unemployment rate. It gave us a spike that we're going to be trading here in September. And we do have things like wage growth and trade balance, and those are the things that we're going to be looking at. You can see that wage growth is stagnant, is not giving us that spike higher like what we had here. So it's becoming less and less productive. So those are the things that we're going to be looking at here. And we had this is the unemployment rate. It's at 33.2. And remember, when the unemployment rate is increasing at the even though it's increasing, the current it's a bearish signal for the currency. The currency will collapse because of that. But the numbers are very tight. However, what makes what covers this what covers my what do I call it, my doubts is that uh, because of the unemployment that is giving us a spike for a long time from 31.9 to 32, then it flew to 33, which is a constant 3 month bearish signal for the South African rand. So here we had a budget balance. Now, a budget balance is something that is very significant. Here you can see that even if I had to avoid it, here it says minus 150.85 billion from 48.75. So this thing is a crazy collapse in budget balance. So because of these things, look at the balance of trade here. It tells me that we have 20.29 from 20.96, which is which is a tied bearish uh, a tied bearish signal. We call it a trade deficit, even though it is tied at 20. Somebody would have been trading this when it moves from 20 to 18. So here it's tied, but it's still a trade deficit anyway. Remember, we're pricing in the sanctions. South Africa is facing 30% tariffs by the United States, and there's a trade war at the moment with BRICS and the United States. So those are the other things that we're looking at. So we have been talking about bearish signals on the or on the South African rand here. So now this is US dollar South African rand, which is a USD ZAR. We talked about how we were pricing in a little bit of a bullish signal on the US dollar, but at the moment the US dollar is actually buying the market, and the ZAR will be collapsing. And because of that, if the South African rand is collapsing, you will see a bullish movement here because the South African rand is buying. And because the South African rand is collapsing and the US dollar is gaining, you will see some kind of a bullish move. But this bullish move is not sustainable because towards the end of September, we're going to be pricing in some bearish economic reports. Remember, the US dollar, the economic reports on the US dollar, try the US dollar is actually rigged, the most rigged uh, economy, especially when we observe the economy with when we add the currency with the euro. So it is very rigged. So trading the euro USD is the worst idea on the planet. So most of the time, the economic reports are rigged. So here, if you are a day trader and you want to buy the US dollar and sell the South African rand, it is a negative carry. I don't take those trades, but for those who want to trade daily until towards the end of the month of September, you might make a little bit of money. We had the test of the 23.6. Normally I expect my trades to reverse on my entry here. So that's how I normally uh, look into the market. Let me show you something. I'm having issues here. We rejected from the 3.6 and we're expecting something like that. So this bullish trend is short-lived, but it's something that can be traded by day traders. I'm a carry trader, so I won't be able to take those trades, but it will be taking off towards the end of I pray that my videos, I pray that I don't capitulate on my YouTube account. I don't want it to disappear, but I'm not giving any signals. So I'm expecting something like this shoulder. But it looks like here we have satisfied the the shoulder over here. It looks like we have satisfied the shoulder over here, but this is the next shoulder. Whether it comes here or it doesn't matter. When I take my trades, I use smaller lot sizes, so it doesn't really matter where it came in. My job is to move my stop loss to break into profit, and if I get stopped out in profit, I don't really care. I'll still take another entry below here. So that's why I normally say I always take losses in my trades. So the macroeconomic, what did I do? The macroeconomic projection in this price action range is telling me that we have this thing that we have here, but somewhere, somehow, the US dollar will give up towards the end of September and will get the actual collapse. Remember, both currencies are bearish in September. So for us to know where the direction of the market will be, whether it's bullish or bearish, whether the Euro USD will go bullish or bearish, will be decided by which currency is more bearish than the other. So this bullish move at the end, somewhere somehow, it will collapse. The US dollar will give up with a what am I doing? Yes, somewhere somehow it will be the US dollar will collapse, will give up on this bullish move. It's a short-term bullish move. So uh, uh, the South African rand is getting weaker and weaker, and the weakness in the South African rand will continue. And the US dollar is temporarily bullish. Somewhere somehow it'll give up. So we will see at that time whether which currency will give up first and which currency will still uh, fight on. So here, this is a long-term trade that I've been looking at, but I'm not making money when the Eurozar is bullish. I make money when it's collapsing. So the euro is also bullish as it is correlated to the Danish kroner, but Macroeconomically, the euro is actually bullish, but is actually bearish because I'm correlating it to the Danish krona and the other currencies that are available. So what I I expect should happen here, because of the South African rand is bearish forever. It's pricing in the sanctions. What I believe will happen is that where is that? What I believe will happen is that this is an economic projection. So what I believe will happen here is that because the South African rand is collapsing, I don't know the time that which the euro will give up. I have to come into an investigation for that. But my dream is that the currency comes up here before anything else, because I know everything about the South African rand and what it will do. So when you see a bullish move like that, you might think uh, it's happening because the euro is gaining strength, but no, it's actually the macroeconomics are telling me that the South African rand is pricing in the sanctions. We are at 30% sanctions by the US at the moment. So those are the things that affect the market. Here we have the pound SGD, and I was talking about this FVG, the fair value gap that was not filled. And here we filled up 50% of the FVG. Normally, this thing repeats itself over and over again. Once you fill up the 50% fee, especially because of the economic divergence, so the market will continue. It will fight on because macroeconomics is telling me that the SGD is long-term short and the pound is bullish. So this is what I call a major bust, but the major bust does not happen because the pound is out of the, it does not happen because the pound is exiting the recession. But you have to remember that the pound actually uh, the pound was what the first interest rate cut was a dovish cut. I will be explaining to you guys what a dovish cut and a hawkish cut is, and that's the reason why the pound was bullish forever. But we have been because the recovery uh, the recovery that happened with the SGD. That's why we're moving sideways, and the same thing applies with the pound, with the CAD. But the CAD is not the currency that I would be trading because it's given me some kind of recovery from the recession. So in the future, I'll be looking forward to buying the CAD, but for now, the CAD is not ready to be bought. So it's actually moving sideways economically, and I'm looking to hold what I call a major bust or an exit of a recession. And those major busts are what we call boom bust processes. They were studied by a man called George Soros from Hungary. So that's the giant who actually discovered these behaviors. But as I discovered what he was teaching, I ended up creating and naming it in my own version. So that's why I talk about boom bust processes. The boom bust processes were first discovered by George Soros. So here we price action is telling us that we're not ready to take off, but the extent of macroeconomic divergence between the two currencies is giving us the high possibility that the 50% of this FVG is enough for the market to take off. So it does not necessarily have to come back to this shoulder here. So this buy will take off for a long time. I know we don't have an FVG here, but we do see it, and the 50% level, the half of this candle here, is enough for the market to take off. So thank you guys. I'll see you guys on the next episode. This is episode 41. I'll see you on the next episode. Goodbye, guys.